Welcome, Forex traders, to this weekly heads up. This is Admiral Markets, and we're going to take a look at how the dollar, euro, pound, and yen have acted last week and what we can expect this week. So we're going to take a look at the monthly candles because the first month of the year has closed. So we have fresh highs, lows, closes, and opens in January. Before we do that, though, this disclaimer explaining that online educational materials are developed by Admiral Markets for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. So please pause the video to read the entire disclaimer, and we thank you for your attention. Let's start with the euro dollar. This is the monthly chart, and last month we had a bearish candle in January. This bearish candle is coming within a series of some upside candles. There is some upside momentum with higher highs and higher lows on the monthly candle. That upside, though, is within the wedge indicated by the purple lines. So what is this? A respect maybe for the purple line for more downside, or will price just make a small retracement for more upside? That is the question, of course. What I'm looking for basically is this level right in here, this monthly low at 133. A break of that would seem to me a decent opportunity to fall down to the next support level, which is this trend line here around 129, 127, right? A break below 127, we could see a fall all the way to the bottom of that triangle. A break above this highest purple one, though, we could see a retracement to higher levels, and then in that case, we would need to put a fib back on, and we can see the following. Price stopped at 61.8, not only at the trend line, and if we break above 138.90, we could see a high, decent probability to move up to the 78.6 at 143. All right, let's move over to the pound dollar. The euro dollar clearly respected the resistance line, the trend line on the weekly/monthly chart. The pound dollar, in fact, has broken through that. That happened already a while ago, where we had a break, pullback, and continue. That continue part, though, is facing major opposition now, where we see a resistance on the weekly chart at around 160.70, 160.73, right? So that is a big level to be aware of. A break above that could mean a bullish triangle, that this entire formation is bullish, and we can see a continuation up to higher targets. To see which target, we could put a fib on this very first move at the minus 272 at 180 is a potential target. The other option, of course, is the fact that this is still a bearish triangle, and as long as we stay below red, that is definitely still a potential possibility. For that to happen, we need a break below the bottom or the top of the triangle, in fact, and we could see a fall to challenge the bottom and maybe a continuation after that. So this candle, by the way, is a bit of a doji, not as bearish as the euro dollar. So interesting to see which lines will get broken first, the purple here or the red. Next one on the list is the dollar yen. Again, a monthly chart because, of course, the monthly candles just finished. And if we look at this uptrend, a very strong impulse to the upside. Obviously, no doubt about that. Recently, we have had a continuation of that uptrend. After a triangle here that took a kind of a half a year, roughly speaking, we had a break of that. And we should see a continuation, but what do we see here? We see railway track candlestick patterns, which is a potential bearish signal. But for me, I'm giving the benefit of the doubt still to this uptrend. This is a very strong impulse, a nice correction and a nice break. This could be just a stall for more upside. So if we then zoom into the weekly chart and look at the most recent breakout here above this purple line, we could put a fib from the very bottom of the breakout, prior to the breakout, to the top, and we can see that price is at the 38.2/50% level. Those two could definitely be bullish bouncing spots for more upside. So if we look at it back at the monthly perspective, the upside break, for example, could see a continuation up to the minus 272, minus 618 targets at around 110. So that is a potential here for the dollar yen. Let's keep an eye on this, or I will, in any case, to see if we get the bounce up from these levels, as I mentioned. Then the Aussie USD, nothing new here. Definitely continuation of the downtrend. Last month just posted again a bearish candle. So that looks bearish continuation for the Aussie against the dollar. Make sure, of course, or be aware that last month's candle could always be retraced in the next month, that is this month. So We could see some upside to retest those levels, and a break though of last month's high at around 91 is a level that I would not necessarily think would break. So let's see if that's true. If not, then we should see, if it is true, then we should see a downside continuation, I would say, to challenge the 272 target, the minus 272 target at around 83.70, and we would have a classical fall, pull back to 50 fib, down to target. With that said, make sure though to check Tarantel's opinion about the Euro, AUD, and Aussie today, the weekly Forex recap. This week we have live trading labs, of course, webinars such as moving averages, trend lines, and oscillators. So that's great topics. Hope to see you then. And of course we have our pro learning labs, Murray Math this week, next week price action, then chaos trading, and then scaling out and scaling in. Thank you for your attention, and speak to you soon. Cheers.